Hey everybody, it's Pete. Good morning. It is Tuesday, June 16th, 2020. Today we're going to talk about something that's a little bit off track. There's so much technology today that it's just so easy to get lost in this giant loop of looking for indicators and that kind of stuff. So in today's video, today's episode of Stocks for Breakfast, I'm going to discuss why I don't use moving averages when I do my game planning. So obviously you see on a lot of my charts, there's really no indicators at all, and there's a reason for that. I've gone through everything that you've gone through where you have the every single indicator you could possibly think of. You've tried at one point to see if it works, but it really comes down to this. When you're looking at a chart, you want to be able to know, is it obvious? Is it obvious that buyers or sellers are doing something? And can I make that decision in an instant in a way that it allows me to have conviction in my next trade? And I think that one of the biggest things, at least for me, the revelation that I had was when I was using moving averages and solely using moving averages, where they were my main way of identifying trades, I was missing out on what was actually happening on the candlesticks. And what I mean by that is I ended up trading in a lot of periods where price action might have been above or below a moving average or even multiple moving averages. But when you actually drill down into the candlesticks, or maybe even over the last week or 2 weeks of price action, there was really nothing going on. And I caught myself trading in this period of time where I'm like, what am I doing? It's not even moving. Which, by the way, that we actually had an unbelievably good coaching call last night in the private community. And we spent a lot of time on identifying stocks in play. I'm not going to get into that today because you need to be a member of the boot camp to have access to that. But I will tell you this: probably one of the biggest revelations came out of the call was I was so focused on helping everybody understand that there are certain types of charts that you should be able to recognize, where you should be able to tell like that in an instant that right now at this stage, while you're trading it, whether it's over the last week or the last couple of days, over the last month, depending on how long you normally hold your stock, there is a way of identifying if that stock has institutional activity, if they're buying it, how long they've been buying it, and just as important, and this is really something that we want to drill home, how long has the smart money been committing capital to the idea that you're about to execute? So in other words, if you're about to execute a buy order or if you're about to execute a sell order, how long has the smart money been involved in that stock? Has it been 3 or 4 days? Is it 3 or 4 months? Obviously 3 or 4 months, or even a month. There's a lot more conviction that you can have when you look at a chart and see something obvious. And I'll show you a small piece of what obvious means today. That you should be able to say, I'm going to place this order because a lot of money by some pretty smart people was put into this stock, and I'm going to hop on their back until I see a reason not to. That's where trading becomes fun, it becomes stress-free, and you eliminate all of the overwhelm because you're simply looking for one thing. Is this stock in play with the smart money right now? And there's some pretty easy ways to do that. Again, I don't want to get into that here. That's kind of private for our boot camp stuff. What we are going to talk about here today. Oh, by the way, if you like the channel, please click down and subscribe. That would mean the world to me if you find these videos helpful. So what we're going to talk about today is something that I learned in this book, Trader Vic Methods of a Wall Street Master. I believe I bought this book, gosh, probably back in the maybe late 90s, something along those lines. Probably something about, this is one of the first books that I actually read on trading. What I want to go over today is why I don't use moving averages, what I learned in this book, and actually how I use what we're about to talk about in what I call working the charts. It's such a simplistic way, but it really gives you a feel for what's going on, and more importantly, what direction you should be trading and how much conviction you should have. But one of the biggest things that I think that individual traders miss is wanting to be long or short, but do you want to be long or short now? So in other words, is there an opportunity? Has the stock pulled back? Has the stock moved too far? Is the stock in the middle of nowhere? These are all questions that you need to answer before you get in the trade. And I say it all the time, and everybody who is in the private communities, you start to get the revelation that when you follow the plan, when you follow the rules, trading is not stressful. The hard work is right now, before the market even opens. Right now I'm filming at 6 o'clock in the morning. This is when the hard work is done. I'm very well known for doing the homework on the sevens. You do it 7 o'clock at night, you create your list of game plan, then 7 o'clock the next morning, you kind of review it and make sure it's still valid, right? But that's where the hard work is. Whether you're looking to hold a trade for a month or whether you're looking to just day trade a stock today, you still need to do that work prior to the market open. But when the market opens, you shouldn't be looking for new ideas. That's the worst thing you could do, especially if you're an inexperienced trader, especially if you're still learning how to get involved. You could even be an experienced trader, but not making a dime. That makes you inexperienced because you haven't figured it out yet. So my point is this: if you want your trading to be easier, if you want your trading to, let me give you the opposite of that. How many times do you get into trade and it feels like every time you put the trade on like that, it's a losing trade, and like you can't even like look away or stop watching your quotes on your watch all day, on your phone all day, because it feels like you're always getting into trades at the wrong time. That simply means that you're not paying attention to learning how to read the tape, which we're going to go over a small piece of that today. If you find this interesting and you feel like you actually finally want to solve this problem, absolutely take a look at the boot camp. I'm going to leave the link below here. It's such a tiny, tiny investment compared to what most of us risk even on just one trade. So take a look, and you also see how other people in the boot camp are doing. I'll never sell it. I just want to introduce it to you, but I feel like it's my obligation to at least introduce you to it because I know it can help because it's helping people. So we're going to head over to the charts. We're going to go through the list of stocks. I'm going to show you how I actually work the charts in the morning. Now, this is not criteria. I haven't put any criteria into this. This is just a list of stocks I look at every day, and then I go and look for opportunities. So if you know my criteria, it's at least 2 million shares per day and at least $1.50 average true range. So that gives me liquidity, which helps me manage my risk. Also tells me that the stock has the potential to be in play, and average true range gives me opportunity. So we're always balancing opportunity with liquidity. So other way, we could call that risk reward. So also, if you have any comments or questions, please leave those below the video too. That would be awesome. So we're going to go over to the charts. We're going to take a look at how we actually work the charts. And again, I started out today discussing the fact that I don't have any moving averages, and I'm not hiding anything. This is literally what I do every day. And you can ask anybody who's in the community. Every once in a while, like we talked about a couple of days ago, I want to know when a stock is getting up to a significant moving average. And obviously this week we talked about the SPY at the 200 period moving average. But that was it. I'm really just giving it a glance because really what I'm looking to do is I'm looking to work the charts. I'm looking to know if the stock is moving. Does it have momentum? Does it have obvious order flow? Is it stuck? And if it's stuck, what level matters to me? So in other words, if I'm looking at a stock, and let's just take the SPY here as an example, I'm going to end up drawing lines where you start at the lowest low for a bullish move and you do not cross through any price action, and you go to the highest low to draw your line. So this is actually one of the biggest things that I want to get across today. What happened here, believe it or not? Yes, this move to the upside was actually exciting. You know what? I'm actually going to decrease the stock name so that we can actually see the charts a little better. So you can see here it's the SPY, but what I want to talk about is here. So I want to just speak about it, what I did again very clearly. As you start to rally, what's our number one question? How long is this going to continue? Well, we don't know how long, but we can absolutely determine if it's continuing. And that's different. It sounds the same, but it's not. If it will continue, if it is continuing, we know that one way and one way only. The trend line that you draw when you're working the charts breaks. So in other words, right here, the trend line broke. And this is where a lot of money goes to die. This trend line breaks. Now you absolutely must get in there and work the charts and say, okay, that's the change of trend. So here's what happens. This is now a potential change of trend. A new trend would form if we break this to the downside. But here's the key, and here's two monstrous lessons that you need to know immediately. So we just said that when we break the trend line, when we work the charts and we've seen that it's going up, now we're looking to see if it's still continuing. Well, right now, it might not be in this spot, right? So we're actually going to do this. We'll pretend that that is where it stopped, right? So now we're going to determine, as we're moving forward from that spot, what do I need to see to tell me that it's changed Or what do I need to see to know it's continuing so I could feel confident buying? So we're going to keep moving this out. We're going to go out another one. Now, what we also have here is where the high was prior to it breaking the trend. So we're going to draw another line there, and the line stays small because, again, we can't see any price action to the right. But what I want to get across here is that's the window, and that's the big thing I want to point out. I'm going to come back to the screen here for a second. As you have stocks moving in your favor, as you have stocks that continue to go higher, continue to go higher. Now, we don't know how long they're going to go, but we do know we can tell if it changes, if the bias changes, if the smart money is doing something different. So once you break that trend line, now you're saying, okay, we have what I call in the course, the masterclass, a potential change of trend. That doesn't mean you stop. That doesn't mean you look in the other direction. It just means you go, something changed there. I have to start paying attention. Maybe you move up a trailing stop. If you want to be super aggressive, maybe you scale out of some of your positions. Maybe you don't. Maybe you say, okay, I'm going to wait for it to pull back, and now we're going to see what happens next. But what is interesting is what just happened in the SPY now gives us a window that you generally don't see when you're looking at moving averages, because you just tend to say it's above or below. But what we're going to look now is we're going to say, how do we translate a potential change of trend into the next opportunity? And that's going to be kind of exciting here. And again, the whole point of this is I want you to be able to look at a stock like that and say, I understand what I'm doing. But again, that last part is actually how to make money. Finding ideas is chart reading. Trading and making money is tape reading. So we're going to get to that next. So now we're here in the SPY, and we know that that's the high before it broke the trend here. So now we have this little box. So what I do all day, every day, and this, again, this is what's kind of exciting about this. Let me just straighten out those lines. So what do you see here now? This is the right price. And that's where most traders lose all of their money. They keep trying to trade here, but it needs to get here or it needs to get here to tell us something different. Do you understand that? It's such an impactful part of trading, because let's say you weren't long here, which a lot of people weren't. A lot of people didn't buy here. They were still frozen, really. But let's say it starts to go up, and now you're considering, you're like, oh my gosh, it pushed up and it paused. It pushed up and it paused again. And now this is happening. So now you have two different data points, which we call tape reading, where you're saying to yourself, okay, it needs to break here to tell me that the continuation of this move is happening. So we know that in this case here was 295, or if it breaks this level at 279, 279.34 to be specific, that means that now we have a change of trend of this 3 months of buying, or however long that was, maybe 2 months. So do you understand what I'm saying now? And this is where trading becomes a lot less stressful, because now me and the community, we're just sitting back and we're saying, well, that's the right price for the SPY right now. Order flow right now is taking a break. The previous trend, I'm going to assume that buying order flow is still intact unless I see something different. So this is why I don't use moving averages, because I want to get in there and work the chart. I want to know the levels. I want to say, okay, nothing's going on right now. So now we keep going over and we're saying, okay, so what am I going to do? I'm going to set an alert up here for 295. If it gets and closes above that level, that's going to matter to me. And lo and behold, we get this move where it just continues to go to the upside. So now what's going on? Now we take our original trend line and now we can redraw it, because now we have a different move, a more expanded move. So what happens now? Now we're doing the same exact thing. It's a much wider box, but now we have the same thing. So now we need to determine, is the current order flow that we've seen off the bounce in March still intact? Now this window is much wider because it's a news story, which, by the way, generally speaking, a tighter trading range generally leads to a continuation. A wider whippy trading range, especially if it's on heavy volume, generally leads to a reversal. So now you have a much, much wider window, which leads to the question, well, what are we supposed to do? That's almost $30. That's a $30 window in the SPY. You say, oh, Pete, what are you doing? We're supposed to do nothing? No. What it means now is, because that bigger picture is a lot less clear and a wider decision-making window, now you need to drill down a little bit further to what's going on the individual candlesticks. So what we discussed yesterday in our trading room, as well as what we discussed in a previous video yesterday morning specifically, is I said I would be mostly day trading because the longer term picture is not as clear because we broke this longer term trend line going back to March. And now we're waiting to see what's the next move going to be for us to have conviction trading out of that window. So I hope you can see how trading, when done properly, it's different than chart reading. Because chart reading, you're just looking for patterns. You're looking to, is it above or below the moving average? Is there divergence? What's going on with the MACD or the stochastics? Throw all that crap out. You want to be able to take a look at a chart and say, it's order flow. It's bullish order flow. It's continuing in that direction. And until I see something different, I'm going to be a buyer. Now, what we didn't cover today is, has it gone too far? Should you not buy today? Should you wait for a pullback? We had an unbelievably good trade yesterday in Philip Morris and Square and a few stocks that had obvious order flow, pulled back a certain amount, and we had these very, very specific tape reading levels that we watched yesterday, and they just exploded to the upside. And yesterday was just a really, really good day of day trading. We had some people yesterday in the room where they would just they actually made more yesterday than they did the previous couple of weeks. But you know what? That's why preparing matters. If you do the homework before the day starts, you're basically on a treasure hunt. You're essentially doing your chart work, looking for levels. You're looking for order flow. You're looking for profit opportunities. And then when the market opens, you act like a trader and not a chart reader. And you sit back and you say, I know exactly what I'm doing today. It's just a question of whether the market unfolds and gives me the opportunities that I'm looking for. And here's a key. You might have 5 stocks in your list for the week, or maybe for the day, or whatever it happens to be. 4 of them might not do anything. They might not unfold absolutely perfect. But here's the key. You only want to get involved when it is perfect. And if that 1 out of 5 does exactly what you thought it would do, which 2 of the stocks I just mentioned were amazing yesterday, you only need 1. You only need 1 to play out per day, per week, in a big way, unfolding exactly as we explain it and teach it. And again, we get into a lot more detail in the masterclass, which comes with the boot camp. 1 trade per day, 1 trade per week, 1 trade per month that does exactly what you thought. Who cares if the other ones never triggered? Who cares if the other ones didn't give you an entry signal? You only need 1. You only need 1 to have all that extra cash flow every month. So obviously, if you're trading more actively, you can get 1 every day, but that's not the point. The point is, when you're prepared, it's a lot easier to make money and a lot less stressful because you know what you're looking at. So I hope this small glimpse into what I do every day in the community gives you an idea that trading doesn't need to be overwhelming. It can be as simple as you make it. And what you see here on my charts every day is literally what I do every day. I do it in multiple time frames where I'm looking at the monthly, the weekly, the daily, and then a couple of other time frames to fine tune my entries. But it really is that simple, and it really can be that easy. You just have to choose to get rid of all the garbage and make it easier. So I hope this video helps. If you have any questions, absolutely leave some feedback, and definitely subscribe to the channel. That would mean the world to me if you find these videos helpful. And definitely click down and learn more about the bootcamp and see how other traders are doing. I think it'll be a revelation to see some of the results. So have a great day, everybody. Take care.